in November. So what do we expect from earnings? Dan Wiener is the CEO of Advisor Investments, and once again, here on Arise Exchange. Thank you, Dan.
Happy New Year.
Very early going, but anything we could see from the earnings so far?
No, it's very early going. Alcoa didn't surprise anyone with its earnings. You know, their input costs are down, demand is up from the airlines and from the automakers, and so they had very good numbers. I think if there was one surprise in the earnings so far, and remember we're 2 days in, KB Homes. Higher revenues than expected, and you know it's always nice to see that the housing sector is doing well. But you know, as the week goes on, we've got a couple of big banks, J.P. Morgan certainly, Wells Fargo. We're going to see Chuck Schwab. Schwab gives you an indication on what investors are doing. They'll give you a little bit of an idea of whether investors have been
very
aggressive or not.
Retail investors,
yeah, absolutely,
right?
Retail investors. Yeah. What is the retail investor doing in the market?
What can we read from the banking numbers when they come out? What will that help guide us?
Oh gosh, I don't have a very big optimism about the banks right now. I mean, they are struggling against the regulatory constraints they have. They're struggling against this low interest rate environment. They're struggling against a lot of bad PR.
Sure.
I mean, what's working for the banks?
Well, the fees.
Well,
bank
sure,
fees,
but bank fees have always been their bread and butter,
yeah.
right? And luckily, we consumers have gotten a little smarter about it.
Wasn't lending used to be their bread and butter?
Sure, but who's borrowing?
Who's borrowing? All right, you have some sectors that you like, and we're going to start sort of with the winners. If we could put up what you're kind of thinking is going to be a strong. Quarter.
The sectors the sectors for 2015. I mean, we're big believers in healthcare. I mean, there's a demographic that just says demand for healthcare is going to go up, whether it's drugs, whether it's the R&D and the biotechs. Yes, we had a great year last year. I think we'll continue to have a great year. The patent cliff is long gone. So the big drug companies are doing well.
Technology?
Technology is fantastic, but I would stay away from the sort of hot internet companies and go more with the big battleship type companies that a lot of them pay dividends. So we buy active managers who buy these big companies, and we think that's
like
where the action is.
Of the world.
The Intels, the Microsofts. Microsoft had a great year last year. The Intels, the Microsofts, the Oracles.
And you like consumer discretionary, suggesting that the consumers are coming back.
Well, sure, the consumer is coming back, and not only that, but the consumer's balance sheet is looking so much stronger. And so if they're paying less for gasoline at the pump, and they've gotten their balance sheets, right-sized at the home, they've got more money to spend.
Okay, so there's a bunch of losers out there that you think, and we'll start with gold.
Well, I'm not a big believer in gold.
Even though it's had a little bit of a run-up?
Well, sure,
Why?
It's had a run-up yesterday. It was down today. I mean, the point is people buy gold because they believe it's an inflation fighter. Number one, there's no inflation anywhere.
Yeah.
And number two, it's not an inflation fighter. Gold has not been able to even keep up with inflation over the 20, 30, 40 years, ever since its peak in the 80s. It's down, inflation's up.
We already talked about financials, which is on your expected loser list, but also utilities.
Well, utilities were very strong last year. Utilities are always strong when folks are looking for yield. If we start to see rates begin to rise a bit this year, utilities, I think, begin to give back some, or at least aren't as popular as they were.
Okay, Dan Wiener, thank you as always.
Sure thing.
All right, talk to you soon.